Hello, friends. So, what is there to look for the stock markets this week? As we are listening, there's another exciting week, and Indian market has been on a downward trend for the 4 consecutive weeks. Yes, the factors such as disappointing domestic and macroeconomic data have actually weighed down Indian equity markets. Now, while we say that the benchmark indices have been weighed down by the stocks like ITC, TCS, Hero MotoCorp, Tech Mahindra, for that matter. Now, not only that, there has been a noticeable shift for the investors to the safer assets like the US dollar. Now, the question arises why they are going for a US dollar. Simple reason being because there are discouraging domestic industrial production numbers, negative wholesale, while there has been an elevated CPI inflation in India. Moreover, because Fed is still looking at a rate hike because it has got a very exuberant retail sales number. Because they have got a retail sales number which are very good, and we can now see that there has been surge in the US bond yield. Now, since this surge in the US bond yield happens, and the China is also undergoing a slowdown, so therefore the money will get shifted from uh, the broader economic markets to the safer assets, and the US dollar is a safer assets because despite the rate hike being higher since 2008, still the retail sales numbers have been very promising. Retail sales number being promising means that Fed will go for a rate hike. And if that happens, there will be an opportunity cost because investors, institutional investors, will take money out of India and park it in USA because they are going to have a higher interest of around 5% there, along with the current currency hedge. This is so. What is there an impact for an Indian investor? So, as an Indian investor, what you need to look forward to. While there has been a 4 weeks of decline, we would be seeing, we might be expecting an uptick in the US equity markets. However, there are continued downward pressures as far as the Chinese economy is concerned. And there is also a symposium coming up on the 25th of August, which has to be seen. While we say that there are 2, 3 key numbers that are going to come this week, that will be US home sales, preliminary PMI data, Michigan consumer sentiment for that matter. So, and the companies such like Zoom, Nvidia, and Low, they are coming, and also Dell Technologies for that matter, they are coming up with their earnings. So that might also impact the matter. While the S&P 500 had around 2.5% return over this, but the bond yield have seen a higher rate of staggering 4.257% as for that. Now the question arises, when there is such thing happening, then what the Indian investor can do? First and foremost, they have to be very concerned about how the global markets are looking forward to. We are looking at People's Bank of China trying desperately hard to bring a balance between the depreciating yuan value and the economic getting the China back on the economic track. Now, having said that, they're very badly grappling with this, and that's the reason why their loan rates have been cut down slightly. The prime lending rate had been cut down, but this, we don't believe that this will be doing much good because of the bankruptcy of their largest real estate developer being on the cards. And that is not only the one institution that is there. There are many other institutions in the real estate segment. And when the 25% of the Chinese economy and the human savings in China is based into the real estate sector, because the currency itself is not a good one to save. So maximum Chinese have been investing into the real estate. The GDP has a 25% impact of what do we say that 25% impact of the real estate. And when the real estate itself in the China is under the doldrums, we can see it's still getting strained. So having said that, we can see Fed rate going high at very good probability. Point number one. Point number two, as far as Nifty is concerned, you can go to our chart on TradingView and you can see that we are going to see negative slump in the Indian equities market unless and until there are not the global cues or the Asian markets keeping some out of the blue returns, or you can say any positive good news that will be coming. If any good news comes, that will be a support for the Indian Nifty. Otherwise, Nifty is expected to be corrected by, say, around next 2.5 to 3%. We can see Nifty going down to around 18,270 levels, and that would not be surprising uh, because it is still under the correction mode, and we can still see pressure. So for the detailed analysis that we have done, you can view our TradingView page of Finogent on the TradingView, where we have analyzed and given the target level for that first. And however, in all these parlance, it is very important to note that if you're having a global portfolio or you're looking to invest, this week is quite a volatile week we will be looking forward to. So therefore, you need to diversify the portfolio. Make sure you are not getting stuck with your preconceived biases as far as investor sentiment is concerned. Neither go for a greed or the fear psychosis. But if you keep your long-term vision in sync with your deployment, this is a very good time where you can still get very good scripts to buy forward to. However, while you can look forward to investing, but we would recommend strongly that you consult your financial advisor, investment banker, or a wealth manager to make any prudent decision on your portfolio, because at the end of the day, money makes money. Thank you so much. This is Rajudha signing off from Financial Solutions. Have a great day. And with this, Market Mosaic, the morning edition, comes to an end for 21st of August 2023. Thank you so much.